Welcome back to the channel. Are you ready to take your Euro-USD trading to the next level? In today's forecast, we're going to uncover the Euro-USD next big move by breaking down the chart and diving deep into the fundamentals driving the market. Whether you're eyeing short-term trades or positioning for the longer run, this video has you covered. Stick around as we combine technical analysis with a thorough fundamental review to give you the edge in your trading strategy. Let's get started. Euro-USD chart displayed, with trend lines, levels marked. Now, let's take a close look at the Euro-USD 4-hour chart. As we can see, the price is currently trapped within a parallel channel, indicating bearish market behavior. The price has been bouncing within this range, moving between the previous day high and previous day low. This consolidation is a critical part of the technical setup we're monitoring. Here's the key. If the price breaks above the PDH and closes above it, this could signal a potential short trade, aiming for the next high, giving us a great risk-to-reward ratio. On the flip side, if the price breaks below the PDL, we could see further downside, and this could be a signal to enter a short trade, targeting lower levels. The pressure is clearly toward the downside right now, and with this bearish consolidation, there's potential for a swing buy at current market prices. But remember, patience is key here. We'll want to wait for a confirmed breakout above or below these key levels before taking action. In-depth fundamental analysis. Now that we've covered the technical setup, let's move on to the fundamentals driving Euro-USD this week. One of the most important factors is the European Central Bank, the ECB. The ECB is currently in a hawkish policy stance, holding interest rates at restrictive levels. They're actively engaged in quantitative tightening, where they're shrinking their balance sheet by not reinvesting maturing assets from the APP, Asset Purchase Program, and PEP, Pandemic Emergency Purchase Program. This QT is a contractionary policy that reduces liquidity in the market, which can support the euro. However, even though the ECB has kept interest rates steady, their hawkish stance isn't a guarantee of future tightening. They've explicitly avoided pre-committing to rate cuts, which indicates a neutral to slightly hawkish tone for the foreseeable future. So while the euro may find some strength, the potential for significant upside is limited unless there's a shift in global conditions. Global risk outlook. Let's take a broader look at the global risk environment, which is another important factor weighing on Euro-USD. The USD has been benefiting from the Federal Reserve's stance, with a much smaller chance of a rate cut in December. This is giving the USD an edge, particularly against risk-sensitive currencies like the euro. Additionally, global risk-off sentiment is pushing investors into safe haven assets like the USD, JPY, and CHF, further weakening the euro. We've also seen weak trade data from China and signs of slowing global export demand, which has added pressure on risk-linked currencies like the euro. Furthermore, geopolitical tensions are rising, and with that, demand for safe haven currencies is increasing, keeping the USD supported. Looking at the COT report, though suspended due to the U.S. government shutdown, historical trends show that institutional traders have been short Euro-USD. This suggests that market sentiment in the futures market is generally bearish on the euro, reinforcing the technical setup we've seen on the chart. The week ahead in the Eurozone. Moving forward, the Eurozone's data releases will play a significant role in shaping the outlook for Euro-USD. Key reports this week include German business sentiment, consumer climate, and preliminary CPI, Consumer Price Index. These reports will give us more insight into the health of the Eurozone economy and help set the tone for the ECB's policy stance in the coming months. In addition, we'll get data on retail sales, unemployment changes, and import prices, all of which could impact future growth and inflation expectations. These economic indicators will be crucial in guiding the ECB's future decisions, particularly with inflation and growth concerns. Combining technical and fundamental analysis. Now let's combine both technical and fundamental analysis to get a clearer picture. On the technical side, Euro-USD is in a bearish consolidation with key levels at PDH and PDL. If the price breaks above the PDH, we may see a continuation to higher levels, but the downside risk remains prevalent due to the overall USD strength driven by global risk-off sentiment. Fundamentally, the hawkish ECB stance provides some support to the euro, but global USD strength and risk-off flows continue to exert downward pressure on the euro-USD pair. So, in the short term, we expect the euro to face challenges, especially as the USD remains in a strong position. And that wraps up today's Euro-USD forecast. What do you think about the euro's outlook this week? Are you anticipating a breakout, or is the USD likely to continue its dominance? Drop your thoughts in the comments below and make sure to subscribe for more updates. Don't forget to hit that notification bell so you're the first to know when new analysis drops. Good luck with your trading, and I'll see you in the next video.